Hey everyone, it's Arlicia with Elite Lending Solutions. So today we're going to discuss why you should not lie on your tax returns. If you were not aware, misrepresenting your income on your return counts as tax fraud. For starters, you can get audited because the IRS gets all of your 1099s and W-2s you receive. They know if you did not report all your income. Even if you accept unreported payments in cash or credit, your financial activity can reveal red flags about what income you do not report, potentially triggering an audit. An IRS audit is an extensive review of your taxes and financial records to ensure you reported everything accurately. While the IRS may only have flagged one return for audit, they can review any of the past 6 years during an audit. Secondly, tax fraud carries heavy penalties and fees. If the IRS does select you for audit and they find errors, the penalties and fines can be steep. If you don't pay your tax liability by the due date, the IRS will charge you a late payment penalty. When describing the penalties for tax fraud, the IRS does not differentiate between income amounts or how much you underpaid your taxes. If you falsify any information on a return, they can fine you up to $250,000. The third reason is that criminal charges are possible. Besides potentially owing the IRS penalties, fees, and interest, you can also face criminal charges. Tax fraud is a felony and punishable by up to 5 years in prison. Failing to report foreign bank and financial accounts might result in up to 10 years in prison. Criminal investigation and charges that start when an IRS auditor detects possible fraud during their audit of your returns. Courts convict approximately 3,000 people every year of tax fraud, signaling how serious the IRS takes lying on your taxes. Last but not least, you may miss out on a mortgage loan. This is where it's really important to me. Finally, not reporting on your income can have serious ramifications when it comes to buying a car or a home. If you underreport your income, it might hurt you when you try to buy a house or apply for a personal loan. You might not get it if it looks like you can't afford to pay it back. When mortgage companies and banks review your application, they request copies of your tax returns to check your total income. If you lied about your income to lower your tax liability, your full income won't be on your return. That means you may be denied the loan you need, which will ultimately hurt your financial future. People tend to lie on their taxes to lower what they want or have to pay to the IRS. But in return, that decreases the amount of income that you're showing on your returns, thus not allowing you to afford on paper a mortgage or a home suitable for your needs. And so I often like to say, you have to pay to play. I hope this has taught you the importance of being honest when reporting your taxes. I talk to so many people on a daily basis about their tax returns, and often the excuse is, I didn't want to pay, or I was going to owe too much. Well, if that is your case and that is your story, then you're going to fall in the bucket of a lot of individuals who cannot afford to purchase a home because they were not honest with the IRS and their income.